So then what happened is it was like, okay, well, we're reducing rates. So a lot of rates actually came down. So people say rates never go down. Actually, that's not true. If rates never came down, you'd be paying $100,000 in premium probably. They do come down at some point. They do. It does this number. Sorry for any listeners. I was doing the roller coaster motion with my hand. Yeah. So with the 2020, everything rates were coming down. Things were good. Driving losses were at an all-time low because no one was driving. Auto rates came down, home rates. So, but then they start to trickle into 21, 22. So if you remember, there was a high spike in material cost. So then once we started happening, and then I think if you remember correctly, in 21 February, we had the crazy freeze that caused over $500 billion in damages in Texas.
Welcome back to the Falls Homefront, where Wichita Falls leads in North Texas real estate, business, and life. I'm Tim Lockhart, and today we're talking about something that affects just about every family, homeowner, business owner, and investor out there: insurance, risk management, and making sure you're properly protected in a world that seems to be getting more complicated every year. Today, I'm joined by Kevin King. He's a senior manager and insurance broker with the Gray Group Insurance Brokerage in McKinney, Texas. Kevin brings a unique mix of corporate leadership experience and entrepreneurial growth. Before joining the insurance industry, he completed a leadership development program with Bridgestone Americas and later helped scale a startup insurance brokerage into a successful multi-state operation. Today, he specializes in auto, home, life, and commercial insurance, helping clients not just buy policies, but better understand how to protect the things that they've worked hard to build. We're going to talk about insurance strategy, leadership, business growth, and some of the biggest mistakes people make when it comes to coverage and long-term planning. Kevin, glad to have you on the show.
Hey, thanks for having me. Appreciate it.
Yeah, so let's start with a little bit of your background. How'd you get to where you are, and how did the corporate leadership experience prepare you in insurance?
It was, so got my bachelor's in marketing, my business degree at the University of Arkansas after 4 years, and loved Fayetteville, but I was born and raised in Dallas. So I knew I wanted to come back here at some point. And so, ended up being immediate. So moved right back to Dallas. And actually, funny enough, I found the job with Bridgestone at Arkansas at like a job fair. You know how those college job fairs go. So anyway, so I thought it was a good opportunity. I have a massive interest and passion for the automotive industry, which is probably like, well, why are you now in insurance? Well, I went through the leadership program that they had started. The CEO of PepsiCo came over to Bridgestone. It was his first year, and he wanted to implement what he was doing there as well, or he had done there, and put all of his college grads in through the stores, the Firestone stores you see here and there. And it was a very much boots on the ground scenario. That wasn't my goal. Was always to go to Nashville and do the corporate world and all of that. And however, as I went through the progress through in the store, which was a great, phenomenal experience, it was like running a little business. Even though it was a massive corporate entity, when you're running a store for 3 years or so, you got to manage a team of 20, different areas of expertise and age. And then the customer experience is a big retail, there's all sorts of things. And then I'm doing P&Ls. We're doing all sorts of procurement and figuring out what to stock, what not to. It's just like running a retail business, but it was a automotive shop, and I loved being able to work on cars and whatnot and all that and that experience. But unfortunately, Bridgestone decided the goal was to get all of those grads into corporate. So they knew in Nashville at their headquarters we knew what the background was in the business. Excuse me. But once that, at least at my time there, it could have changed now. But when I called, be like, hey, I've hit all the markers. I've done everything that you've asked me to do. I've been checking in, and there was program managers that kept changing. So anyways, they basically were saying, hey, it's no longer just apply like everyone else. I was like, okay, maybe this isn't for me anymore. Great time, learned a lot, I felt very equipped to go in further. And Next thing you know, I was sitting at lunch with my brother-in-law, funny enough, and I've known him since I was in fourth grade. He's like a brother to me, legitimately, and we work really well together. We're very like-minded, and also, we just work great together. So anyways, he was like, hey, and this was in 2018, and in 2016, he had started, middle to end of 2016, he had started the Gray Group. It was a small operation. It was him. He purchased an insurance book out in Haskell, Texas, where we had a couple employees out there starting. And actually one of those employees, Bo Tatum, who's a rock star out there. She's still with us and works with us daily. I talk with her all day. She's awesome. But that's where we started there. And then he hired me. I work from home. And I was like, insurance, I don't know if I want to do that. But then I broke down insurance and I'm like, well, what do I like? I'm like, well, I like talking and working with people. I like educating and teaching people. That's one of my passions. And insurance, I can learn. It's whatever, but it's a commodity that everyone hates. And heck, even I find it annoying and frustrating at times, but at least I can make something that is needed better, hopefully. So that was my always goal, to do that. And once I started getting into it, I really enjoyed it and worked from home. And then it just kind of went from there. We opened our office in Denton. We opened multiple offices and so on and so forth.
Oh, that's great. That's a really interesting kind of path that you took. So.
Very much so.
Yeah. And it's true. Insurance isn't something that people normally like talking about, and until we need it. And then it's like, oh my gosh, where's my policy? What do I do now?
Right. Exactly.
Yeah. Yeah. So scaling is often a challenge for entrepreneurs and small business owners. What did the scaling of your business look like, and what kind of hurdles did you have to overcome?
Yeah. So Dylan, being the owner and I would argue, or not argue, the business side of things, of everything there. Obviously, when he started out, he was the agent and manager and owner, and figuring out, okay, we're going to do two things here. He's going to do so, at the very beginning, I'm talking about with only a couple employees trying to grow and see what we can do. So, but he immediately, as we started to grow that book of business that he purchased, it had really good contracts. That was the focus. Because there's two ways you can grow an insurance business. Or there's probably multiple, but there's two main ways, especially in an insurance brokerage. And I'm not talking about the captive agent where they get with Allstate or State Farm and they either take a loan out from them or however structure that business. And then a lot of profits go to the company and a lot of it, and then they get some of it and manage it that way. That is not what we're talking about here. That is one way to do it. That is a captive agent. But Dylan actually came from Farm Bureau. His dad was there. Dwayne Gray was there for, probably over 40 years, retired there and did a great job growing even Farm Bureau. And Farm Bureau is a great company. And Dylan, out of college, he actually got out of college in 2008. So you probably know what was happening in the world at that time. And he was in commercial real estate. So he was like, well, I got to pivot this pretty quickly. So he worked for Farm Bureau and was like, okay, maybe captive isn't what we need to do. We need to help our customers where we can have options. So to get into that, then he found a book in Haskell, like I mentioned earlier, where there was really good contracts involved in that. When I mean by contracts, I mean contracts with carriers. So talking about Chubb, there was an Allstate contract, which aren't easy to find typically. Later on, there was Germania, Progressive, Mercury, Liberty Mutual, Safeco, even some commercial ends of things there. And our portfolio has grown since then. But so he started that out and then it's like, okay, well, if we can have good contracts in a place that's real small. I mean, Haskell's a very small town, and purchase that and then grow from there. That's one way. The other way would be, well, if you have really large capital, let's say go down to University Park somewhere or somewhere, a higher affluent area, maybe Richardson, Plano, Frisco, and buy, if the person's even willing to sell, and buy a massive book and maintain it and grow it. So two different ways to probably do it. Obviously, starting out, the first option is what he took. And as I've known Dylan most of my life, and I've always respected how he goes after and grows businesses. So what he ended up doing, he first set me up and was like, all right, you're going to work from Dallas. Let's try and start capturing this market. You'll work from home, but just go out and shake hands and do whatever you need to do. I love sales. I love people. I could talk to anybody for any amount of time, a brick wall, it doesn't matter. As I'll probably ramble on a little bit too much in this podcast, so I hope not to take too much time. I'm trying to be as concise. I can go on tangents, but it works out I do love talking. It's fun. In fact, speech was one of my favorite classes, and I like putting on presentations, which is weird. I know that. But to digress into that, he was like, all right, we're gonna put you there. And then he just was like, you go sell. You do that, you hit the client base and learn everything you possibly can about every carrier possible, even carriers you don't have. Let's learn about it. And so while I worked in my house, I was reaching out to everybody. I was also listening to podcasts constantly. I multitask like crazy. I probably got 50 tabs open on my computer and I'm running crazy, but I love operating that way and it keeps me going. And so we started growing that. Well, Dylan had a phenomenal, it's one thing that honestly, I talked to a lot of other insurance professionals, even big, like higher ups in big aid carriers, because we meet with a lot of carriers and they want us to sell their product and whatnot. And they're like, we don't really see how Dylan is doing this very often. So what he does and how he grows his business and the challenges that we face is he goes out and he figures out how to procure other agencies. Well, it's similar to buying businesses, really, at the brass tacks of things. But there is a little bit of differences in the sense that what's kind of nice about in the insurance independent world is you can capitalize on agencies that either are, maybe the owners are retiring and they don't have anybody to give it to and they don't really know who to sell it to. Or maybe they have some people that maybe they have family members or friends or employees that want to keep working, but they don't want to take over the ownership part. They don't really want to manage it. They just want to have which is great. We need those people. That we don't necessarily need everybody to be entrepreneurs and everything. We need people to love what they're doing, work with people and keep working that. And that's great. And so he was utilizing and the way, and I still to this day don't understand how the man networks and finds these people in different areas of the country. It's really phenomenal how Dylan does it. He's always got something going. He's always got something moving along because you have to. And if you're not moving forward, you're probably moving backwards or you're staying, and we don't want to stay still.
That's right.
We want to keep moving on that. So he would find these carriers and either make an offer, and there's multiple different ways you can structure purchasing an agency and whatnot. So through that, we went from, like I said, that like 1 to 2 office out. We actually purchased another office in Haskell shortly later. Early on, we are now about 11 offices and 27 employees, and we're physically in 3 different states. We operate in more states, but have physical offices there. So it's grown exponentially and all of that, which has been great. And the cool thing about insurance books is when you buy the insurance book, usually on month 2, if you've bought correctly, you've looked into the books correctly, and you see how the finances are working within the insurance book, you should be making some sort of profit by month 2, maybe small, maybe large, who knows? But the other aspect is finding books that are either underserviced or maybe there's too many employees in the office. Maybe there's enough employees, but the owners, they need to step back and those employees can actually run the book. And then you can consolidate and start consolidating. Once you consolidate payroll, then you can also, but because our number one thing is also the customer service aspect of it all. So we always want to make sure we have enough employees for the book, but also, finding that perfect threshold of enough employees to where we're servicing everybody, but not too much to where the payroll's too high and doesn't make sense financially. So it's really, but we always want to overhire just slightly. We always want to be ahead of the game because we're growing. And so that's how it goes for that. Now, as far as struggles, the number one struggle is always, oh my gosh, someone's taking over the client from the client side. Who's this person? Is this a big corporate company? Am I just becoming a number? Then it's the employees there. Hey, my job is about to mix. It's just like buying a company. And so our approach we always took was, if it isn't broken, don't fix it. But we also want to maintain the great customer service that a lot of these books that we purchased had phenomenal customer service and they liked it, but they were just wanting to retire. So coming with that, and we had some people, you had some clients leave like, oh, it's just change. It's like, okay, that's fine. Well, we'll always be here if you need anything. And then also working with the different, like any business, the different personalities, the different clients, the different employees and whatnot. So, but through that, as long as we kept the customer service first, Because I truly believe in a lot of, when you study a lot of really successful businesses, whether it be Sewell, the dealerships, the Chick-fil-A's of the world, or even going to, let's say, a Ritz-Carlton or Four Seasons, which I know it's on a higher echelon, or these businesses that really focus on the minute little details that a lot of people go, oh, let's throw it away. That affects our bottom line. No, I think those are actually so important. And then, but above all of that is the customer service, whatever it takes to work with the client. So we had those challenges with the employees and all that, but then as long as we kept our focus, and that's why I hitched my wagon with Dylan and working with that, and is because we have the same focus. And I want to do a little asterisk here too, is obviously I know Dylan, there's some relation there too, but I'll clear it up right now. I'll just say this, I won't go into any details, but he did have to let go a family member at some point. So no one's safe. I'm not safe. If I don't produce, I'm not here for long, and rightfully so. So, but and the good news is him and I are he can come to me and be like, hey, what are you doing? Why are we messing this up? I'm like, oh, yep, let's move forward. And it's always, we're just very business minded oriented. So it works out really well.
Oh, that's great. That's great. Let's talk a little bit about the insurance trends. There's been a lot of changes in premiums and coverage. Of course, here in North Texas, we have a lot of hailstorms and things. So what's the current state of the insurance market here in North Texas, and what's happening in the near future?
Yeah. So, a lot of in the past, I'd like to let's start looking at around 2018, 2019. So in 2018, 2019, I got in 2018. And it seemed like it was a very open market. We had a plethora of carriers. So, no one needs to memorize it all. You can always look at our website at graygroupins.com to see the carriers we have. But seemed like I was selling for at the time, it was like Allstate, Germania, Progressive, and Safeco. And it was like, anytime I put it in the rater against, let's say, another carrier like State Farm, Farmers, USAA, I was annihilating it by like thousands of dollars through, like, usually it was like Allstate and like Progressive. It was just like constant. And then as time goes on, well, those carriers start to take on losses. And then I have to okay, well, then let's shift it to another carrier. And maybe all those clients I wrote with Allstate, let's move them over to Travelers, or let's figure this out, or move them over to Germania, or move whatever needs to happen. So, but at that point, it was pretty, everyone had a 1% wind and hail deductible, even the high end market. It was like everybody was at the table still, is what it felt like. And that's why I think it's important to start at that point. Well, 2020 and 2021 hit. We all know what happened in those years. Well, in the insurance world, it actually was really funny because it was from 2020 to today has been a drastic roller coaster. So in 2020, we actually saw carriers like Germania and others give money back to their clients. They got refund checks. I'm not kidding. That was a thing. And I'm sure a lot of people saw it and whatnot. I mean, they were giving away millions of dollars. I know probably to some people like, well, they only got a few $100. Like, yeah, but multiply that by all the clients, actually pretty awesome. And Germania, I think, was like one of the first ones I ever saw do it. It was pretty great. I'll bring them up a lot. They're probably one of my favorite carriers. I have a lot of my carriers I all respect, but they're probably them, Travelers, Chubb, Progressive. They're all like some of my favorite clients and carriers, and I have many more. But so then what happened is it was like, okay, well, we're reducing rates. So a lot of rates actually came down. So people say rates never go down. Actually, that's not true. If rates never came down, you'd be paying $100,000 in premium probably. They do come down at some point. They do. It does this number. Sorry for any listeners. I was doing the roller coaster motion with my hand. Yeah. So with 2020, everything rates were coming down. Things were good. Driving losses were at an all-time low because no one was driving. Auto rates came down, home rates. But then they start to trickle into 21, 22. So if you remember, there was a high spike in material cost. So then we started happening, and then I think if you remember correctly, in 21 February, we had the crazy freeze that caused over $500 billion in damages in Texas. So that was so you had a perfect storm, pun intended. Mm-hmm. You had carriers reducing their rates. Then you have this massive payout. And now all these carriers are in the red and they're not wondering what to do. So they're like, okay, now they're kind of panicking. They're having to pay all this out. Reinsurance is going up like crazy. Everything's going crazy. So then they have to drastically go up. So what insurance likes is predictability and be able to see the future, to be able, or as best possible, to be able to to adjust the rates accordingly and properly and to foresee that. Well, when you have a COVID and then you have that freeze and you have multiple events that haven't been seen in either ever or hundreds, thousands of years of or back to where we start tracking these things, they don't know how to react. So they lost all this money. So then what you started to see, and then on top of that, we had, if I remember correctly, I'm sure someone can correct me and look it up and totally fine. I want to say it was 22 and 23. We had just like an onslaught of like hailstorms, tornadoes, windstorms. I felt like I was filing a claim every other day. It was just an onslaught. Well, when that started happening, now you have material costs are still kind of high. They came down a little bit, but they're still high. Inflation is high. You have a number of storms coming in. You have carriers that are still licking their wounds from 21. You have people starting to drive again. Traffic is being put back now. And then on top of that, if you remember in COVID, the influx of people that moved to the DFW area. So we have our virtual office in McKinney. We have our Denton office as our mainstay office. I work out in my North Dallas home, funny enough, because I'm more regional. We have all sorts of places in Texas, even down in the Austin area, and have some employees in San Antonio and Waco. So we get to see that wide gamut thing. So we have all these storms and everything happening all at one time, and everyone's moving into the DFW. You get these brand new, like these huge, I'm sure if you ever, I don't know if you've recently, you're in real estate, so with Prosper and Aubrey and even Gunner, which we have an office in as well. And like all these crazy influx. So now you have, let's say 1,000 new homes that are built with 1 year of premium, and then a hailstorm comes through, because we know Prosper is just like North Texas, north of like basically 121 is just like hail central and tornado central up there. And it just, now you've got 1,000 houses with brand new roofs that are getting demolished, needing new roofs, and you have carriers that haven't been able to build up any sort of premium. So as you can see, it's just all going on. So then what ended up happening in 23 is you have these carriers freaking out. You have Vault, which is it's a higher end, like $1 million plus, like Chubb. AIG back out of Texas entirely. They stopped writing. Germania, been around for they just celebrated their 130th anniversary this year. They stopped writing new business, which is unheard of. They only write in Texas. You have a couple other carriers starting either stop writing business or restricting everything, because that's how they're going to stay afloat. And, I totally understand. I'm not here to weep and cry for big corporate companies. That's not what I'm about. I don't care. Like, it's business is business. It's just what it is. And I'm not asking clients to feel bad for them. It's just more look at it as a reality. And while, you may have some companies that want to pad their pockets, companies like Germania, I saw, and because they show their books, they show the numbers, they show everything. Them and like other carriers really were like, hey, we are truly struggling. Here's how much money we lost in these 2 years. And it was hundreds of millions. And it's like, hey, we're losing money, but we are trying to stay afloat and we want to take care of our people. It's going to be hard for a minute, but we are going to come back. So sure enough, they were right. And after about 2 years, maybe a little less than that, I think it was about a year and a half, maybe, they started to open back up again, because they stopped writing new business, stopped taking on new risk, stopped having as many losses. Also, in the last 2 years, knock on wood, the storms have been pretty mild, not as many losses. So and the rates increased. So what they're doing is working. And so much so now we have carriers coming back to them. All the carriers are pretty much back. I just wrote a brand new Vault policy recently when I can write it for years, and they're great. It's a great policy, great carrier, and they're finally back in Texas. And now I've got all these carriers starting to open. Germania is open fully, and some people are restructuring a little bit. Travelers went from I used to write $3 million homes with Travelers, and then they were like, we can't do anything over $1 million. Now they're back. We can go over $1 million now. You have Germania expanding to 1.5 million. You have all these expansions happening now, which is phenomenal. So what you would call is the market softening now in a good way, in a sense of the rates are becoming more favorable. Carriers are being more open up. More products are coming out, which is phenomenal. And then now the 2%, I definitely want to hit on the 2% wind and hail deductible. That's something that's a big buzzword that keeps coming around. It is true. That is still there. And there may be some people are so grandfathered into their 1%. It'll probably change here pretty soon. Some carriers, if they can write a 1%, they're very restrictive on which zip code. And that is, unfortunately, that comes down to a multitude of factors, all that I just brought up, the losses, the hailstorms, but also, unfortunately, and I actually listened to your episode. I don't know which number it was recently with your roofers on, and they did a phenomenal job covering it. I actually really enjoyed listening to them. Sometimes I kind of grit my teeth. I'm like, oh, what's the roofer going to say? Because I know a lot of times they don't like insurance, which is fine. Like, again, I'm a broker. I'm not a part of them. I sometimes side with them a lot. I'll get in fights with adjusters occasionally, being like, hey, no, they are right, But they hit the nail on the head on a lot of things, especially too. And I insure a lot of roofers too, a lot of respectable, very ethical roofers. So they are great out there. I want to say all this before what I'm about to get into, because it is not every roofer. There are great roofers, or great contractors. I like what they said, find someone local, not from out of town, find someone who's been trusted, who's been around and whatnot. It doesn't have to be a big company. It could be a smaller company, but just make sure they are trusted and they know what they're doing. But unfortunately, there are a lot of predatory roofing. Even like they said, people from out of town coming in and really, I have a really quick story. A client called me in a panic because they finally went to 2%. They're retired. House is a sizable. I want to say it was north of a $500,000 house, but it's a big 1-story roof. And they got a knock on the door. Hey, we want to look at your roof. We knew some reels, whatever. We're just in town. And they looked at the roof. Yeah, it's going to be a $70,000 roof. And, you got to imagine the client's panicking. It's a 2%. First year of 2% wind and hail deductible, this whole thing. And I was like, hold on, get a roof that you trust, whoever you trust. I don't really want to recommend because I'm liability, but here's what I would look at. And I have a couple recommendations, but next thing you know, they're coming by and they're like, yeah, you need 6 shingles. The roof is fine. It's $400 bill. Stuff like that happens. And it's not everywhere. It's just some places. So that is also another added element to the 2% wind and hail. So it's a both and. It's all the above. It's nuanced. So anyway, sorry. Again, I'm trying not to babble too much, but there's a lot of moving parts.
Well, there's a lot. Yeah, there's a lot of information. It's a big topic and everything too. Yeah. So buying insurance, as people are buying homes, it's a large part of their total payment, the PITI, principal, interest, taxes, and insurance. And so how does working with an independent mortgage broker like yourself differ and help to structure that payment?
Yeah. So what I always try my best to do is, first and foremost, which carrier is going to be the best for you? Which carrier is going to give you the best bang for your buck? I get a lot of comments a lot of times. Hey, my neighbor's paying this with this carrier, and this carrier we have, and I'll shop it. And I'm like, well, here's the rate. And they're like, it's twice as much as my neighbor. What's going on there? It's like, well, it's really hard. Like, they have the same house and the same this and the same that, whatever. It's really hard to compare apples to apples, even with your neighbor. Zip code, yes. Type of house, sure. Value, yes. But there are so many other factors that go and involve with creating a price. Now, do I know all those exact elements? Not really, because it's all in the background of the actuary tables. And I know what's on the application. I know when I change one thing or another thing, and through the years of experience, what causes what and what can help. So my best thing to do is I'm like, okay, so first meeting with a client, send me everything you have, whether it's a new purchase, whether they're already insured with a carrier or whatnot. I want to look at the listing. I'm going to look up every detail I can possibly find about this house and seeing what I can do. So first, I'll have a conversation like, hey, is there any deal breakers, carriers that you absolutely hate because of one thing? I want to avoid those. And we'll talk just a little bit, but then I'll do my homework. Then I find the carriers what's best. And let's say, and it comes out either I'm getting them the exact same coverage that they have with a better price, which happens often. Then I will go, okay, here's what you have. Here's copy. Here's apples. Here's a better price. Okay. But here's the thing. And then I do what basically I like to think of myself more as an insurance consultant than I do an insurance agent. Really. I really want to educate the client. Obviously I don't want to bore them. I kind of have this line I always bring. I'm like, look, I can go as minimalistic as possible and tell you what your deductible is and your overall coverage. Or I can sit here for 2 hours with you and go through every single line item. And I'm happy to do both. Funny enough, I find joy in it. I really do. Because again, I love teaching and educating people because I know it's for their better. And honestly, there's many times even when I go, hey, I've even had it where I go, hey, I cannot beat your rate. I can't do it. It's just, you are with a carrier. That's great. There's no problems, but I do see A, B, and C that may be an issue. I would talk with your agent on that. And I'd even try to educate them then. And funny enough, this is I'll do that. And maybe I'm only $100 more a year. And the client goes, no, you're servicing this better. I would like to become your client. I'm like, great. That's phenomenal. Really appreciate that thing. So I try to work within what they want and how they want to structure it, because at the end of the day, everything's going up. The economy is crazy right now with cost. We're trying to find where it is, especially just wherever. I know I'm trying to find it. So the cool thing is, like I said earlier about the insurance market opening up, they actually are coming up with new products. Like Germania has you can literally just have a set limit on a roof. It's a one check system with a smaller deductible. It's really good. If anybody has questions and details, they can always contact me. I put it on my house and really cut my rate in half. It was great because I got an older roof and I'm going to self-insure it. But so there's tricks like that. There's products like that. There's discounts. There's, hey, maybe we don't need to have this much insurance. Let's look at this on how this works. Talking to them about the value of their home, and because market value is completely independent of how we insure the home. We don't even talk to each other. I don't even look at market value. I don't care about market value. I care about the reconstruction costs. So I'll structure all that, see what we can do, guide them as best as possible. And sometimes I'll even cut back insurance. I'm like, you are way overinsured here. We don't need to be here. We'll do this and structure that way. But at the end of the day, I'll finish here with your question is, sometimes the cheapest policy can be the most expensive policy. I have seen clients go to or get rid of an agent to go just direct to a carrier, which can work. But sometimes those policies are, maybe all the limits are the same, but you're not looking into the actual contract of what is actually there. Is it open peril? Is it named peril? All these different things. And what I would say is it's even more important, and I'll toot my own horn here, I guess, a little bit. I don't like to, but find a good agent. Your policy, I can't tell you, I have over 6 figures in denied claims turning into approved claims because an adjuster maybe didn't understand something, or there was miscommunication, or maybe they thought certain thing. And I'm like, no, it's this. And I've even had adjusters go, well, I've done this for 20 years. I'm like, with all due respect, you've been doing this 20 years wrong. Look how it shows it in the contract. I'll pull the contract and go, actually, I'll first show me the contract where it's denied, because I know it's approved. And then they show it to me. I go, read the next line. And they go, oh, and I'm like, yeah, it's actually approved. It's cut back, cut away. You got to read it fully. So that's the other part is there's a lot of agents that just go, well, my job's done. I wrote your policy. I'll take some changes. But during a claim, I'm an advocate for you. By law, I'm supposed to be an advocate for you anyways, but I want to be. And cutting through those problems with claims and whatnot. I mean, I had a retired widow who had a $40,000 barn get destroyed by high winds, and it was going to get denied because they said it needed to be scheduled. I said, no, it's another structure. It works. Next thing you know, it's getting fully covered for the client. So it's stuff like that really helps out. And that's how I try to help not only get the price down, educate them properly, but even in a loss when they're looking at a $100,000 claim to try to make sure and get all their money's worth.
Right. Something that has changed, I'm not sure exactly how long ago this changed, but like water damage. So there's a difference, and people don't necessarily know this. There's a difference if the water damage originated from something inside your house versus outside your house, coming in like storm coming in versus, say, a dishwasher or the water heater exploding and causing a lot of water damage. So how are those handled with the insurance, and what do the buyers need to look out for?
Great question, because I think that claim is probably one of the most misunderstood. And a big part of that is, so to back up, I want to get back to the very basic of a claim. You need to first start by saying, what is the initial peril? Because that is going to dictate where it gets covered. So for instance, roof gets damaged, water comes in from rain, and you get water damage. What's the peril? Well, the peril is going to be the wind. So that's a wind claim. That's not a water claim. Water will be covered depending on the policy. I'm speaking of a very comprehensive policy. I want to put that out there, by the way, for the hypothetical, so I don't get myself in trouble here. I'm not speaking on everybody's policy. I'm just saying, let's say a normal, very comprehensive, let's say a policy with Travelers. I can speak on a Travelers product. It's an open peril, wind and hail, it comes in, water comes in. That's going to be covered under the wind deductible. So that's number one. Now, to get onto the water claims, so like things called wind-driven rain. That is a very important term. The biggest part, I have it's actually shout out to my wife's godmother. They had a house, and they don't have it anymore, but had a house down in Rockport, and it got hit, and it was like this wonderfully built house. was built to withstand a Cat 4 hurricane. And a Cat 4 hurricane was sat on top of, and it was Harvey that did it. Literally just sat right on top of that house. It was incredible. And the damage that thing took, but it stayed standing. It would have been fine. But what ended up happening was a piece of debris punctured the home. And so that's wind damage. But then also, now it wasn't part of this claim. I want to be clear. I didn't insure this house at this time because it's just where it was complicated. This was earlier on in my career and everything. But I was talking to her more about it because I just want to, it's a big claim. I want to talk about it. So, water then ended up coming in because of how the wind was swinging. Back doors water kept coming in that way. But that was wind driven rain. And that was covered. That is a covered peril, and not all policies cover wind-driven rain, especially what's called a named peril policy versus an open peril. Named peril, they name the perils that are covered. If it's not named, it's not covered. Open peril, the exact opposite. If it's excluded, it's not covered. If it's not even excluded, it's covered, which they're broad. They are broader coverage. So all of that. So then that's number one. Then the other one would be, so the different ways that, like, for instance, outside versus in. So obviously the big thing, everyone likes to use the word flood, and I know why they're using that. Like when they talk about a burst pipe, well, that's not flood. Flood is rainwater is basically causing water to come up, either from a river or whatever, and coming outside into the home. That is a separate policy that to my knowledge, and I'm very confident in this, but there is not a single homeowner's policy in the state of Texas that actually insures for flood. You have to get a flood policy. Most people aren't floodplains. Some are. Again, if you have more detailed questions, feel free to contact me on that. But anyways, so that's one, that's separate policy. Then you have, this is probably the most misunderstood. And there's three here. There is sudden accidental burst of water, slow leak or limited hidden slow leak, steam, seepage of water. Again, that's a lot mouthful, but basically think slow leak. And then there's foundation water damage. Those are the three that I see all the time and are misunderstood. Sudden accidental burst of water, exactly how it sounds. Think of a burst pipe, frozen pipe during February, thawed out, boom, you walking into an inch water. That's it. Water heater letting go, dishwasher letting go. Things where you walk in and it's like, oh, there's a puddle of water here and it's just damaged all my floors. That's a sudden and accidental burst of water. Pretty straightforward. The one that not all carriers, and this is one I want all people listening to this to go into their policy and look for. And then if it's not there, ask questions to their agent. Look for limited hidden seepage of water, or it's going to be slow leak, or it may even be listed as just water damage, which could be like Hartford, I know, has like a very wide encompassing of that. And they have separate limits. Some carriers only go up to 10 to 20,000. Some go up to 100% of the home. Those are that's kind of one of the best examples I have that I see where it covers is, let's say you have a shower pan that has failed. And every time you take a shower, it just leaks a little bit into the wood floors in the next room, just every bit. Next thing you know, you got a $40,000 claim, you got to replace your floors. That would not be covered on a sudden and accidental burst of water. Your best fighting chance would have that limited, of course, again, I'm not an adjuster, can't say, yes, this is covered, this is not. We're speaking hypotheticals here, and definitely it's going to be up to your adjuster. I want to be very clear on this. Legally, I have to say, I cannot say, yes, it's covered. No, it's not covered. But what I'm more explaining is what the purpose of that coverage is. So there's that. Then there's foundation water damage. That one's normally like your slab leaks if you have to, and not all carriers either have a high limit, and it's optional. So check on that too. Am I saying, hey, if you don't have that and you have a slab leak, are your floors not covered? No, that's not what I'm saying. That's water damage to the floors is what it is. The foundation water damage is if the water leak creates a cavity in the foundation below it and it breaks the foundation, that could be covered there. Or if you have to drill through the foundation to get to the pipe. That's that one. I do want to cover one last one. I just remembered, and I apologize really quick. It's called water backup. That's another one. That's another one that's very limited and not many people think about. That is if there's any obstruction in any sort of sewer line, no matter basically what it is, and your sewer line backs up, and next thing you got sewer water in your bathroom. I just had a client going through it right now, and you got black water in your house. Well, pretty much all carriers have a limit on that. Usually it starts out at 5 to 10,000 with a different deductible. Some carriers like Travelers, I can go up to 100% of the home. I can go up to 50,000 even. Some carriers limit at 10, like Allstate. Some 25, 20. It just depends on what it is. So that's definitely another water backup that you want to look at. So to summarize again, you got wind-driven rain. You have your sudden accidental burst of water. You have the flood. I mentioned that one before that. You have your limited, hidden, sudden, slowly. I mess that up every time. And water backup and foundation water damage. So it's a lot of different things and different ways it can attack. Definitely talk to your agent. Again, of course, I'm sure in this podcast, you can link my cell phone or email and ask any questions. I'll be happy to answer.
Great. That's a lot of information, but it's really important for homeowners and people who are buying homes that are looking into getting insurance, and to know about those things and to know the right questions to ask. So Kevin, thanks for coming on today. I truly,
of course,
do appreciate your insight and helping us to kind of understand a little bit of what goes into the insurance that we're buying, and kind of why the rates are the way they are and why coverage is the way that it is. So it's really helpful, I think. For those who are listening who want to connect with you, what's the best way for them to reach you?
Best way, honestly, I try to be, no matter how many clients I get, I want to be as personable and direct as possible. And I know a lot of people might wince to this, but you can seriously call my cell phone or text me. That's not because I have 5 clients. There's many. But I want to be available, and I text a lot too. There's a whole reason I have a MacBook, is because I can text from my computer. It's great. But anyways, my cell phone is one of my best ones. I'll put it out there right now. It's 469-766-2999. You can rewind that if you missed it. But then you've got my email is kking. It's my first initial, my last name. So kking, KKING at Gray. And that's a big one thing I want to put on here. Gray is Gray. After Dylan Gray, his last name. So it's AY. So kking at Gray, Gray Group, and then INS, Indigo November Sam. So like short for insurance. So kking at graygroupins.com. Those are the 2 best ways to connect with me. We also have our website, which is graygroupins.com. It has all our offices, our employees, our contact information, who we support, all that. And there's even actually on our website, there's a place where you can submit like a quote request. That does go to Shauna, who's like kind of I call her our COO. I don't think officially she has a title, but she runs all the operations. She does a phenomenal job. It does go to her. So if you want to get in contact with me, put in the notes on there, be like, hey, heard Kevin on this podcast, would love to get in touch with him. Or like I said, contact me directly. That's going to be the best way.
All right. That's great. And for those listening out there, here's a big takeaway. Building wealth is important, but protecting what you've built matters too. So if it's a home or a business, having the right people in your corner does make a big difference. So if you found this episode helpful, please like and share it with someone who could benefit from hearing it. So thanks for tuning in to the Falls Home Front, and we'll see you on the next one. Appreciate you tuning in. Want more insider tips on buying, selling, and investing in Wichita Falls and North Texas? Subscribe now and keep watching. Your next move starts here.